Hi, wonderful community. This week, we're going to explore and give you a framework to think through your decision making when it comes to superannuation among global and Australian turmoil in the share market. You're not alone if you've been thinking about, what this means for your own investments and including your super. So what we've done is spoken to a number of experienced investors and financial advisors. And I'm going to talk you through a framework that one of our financial planners that we work really closely with, Alicia led, and who's available for our Verve Super members to speak with through the support squad, how some of the thinking that she takes her clients through when it comes to navigating the market and making sound financial decisions when we're seeing, some really big highs and lows and a lot of, as we say in the finance world, volatility in the market. So while we can't provide financial advice specific for your personal circumstances, we'll take you through, as I said, a framework and the thought process and demystify a few concepts to help you make sound financial decisions at this time. So, of course, it's not only about looking after our finances at this time, it's also about keeping our spirits buoyed. So I hope that you are able to do some little bits of fun in your life to keep your spirits buoyed. I know that even this morning, my 2-year-old and I painted our nails bright pink, and over the last week, my kids have drawn rainbows and positive messages on our garage door for passers-by. We've been doing a few secret random acts of kindness, dropping punnets of strawberries on people's doors, etc. So it's incredibly important for our financial decision making to keep our spirit and our perspective and our mental health solid as we can through this time as well, because when we're coming from a panicked place and we make financial decisions, that's when we can often come to have regrets later on. And so it's incredibly important to do small things in your life with self-care and reaching out to others to make sure we maintain, a centered approach and and keep some perspective when we then apply our thoughts to our financial decision making. So let's talk through a couple of key questions that are coming through at the moment, and they seem to be the same couple of questions and obviously are reflective on a couple of different schools of thought. So the first is it the right time to make personal contributions into, a balanced growth focused superannuation account? And the second question is, should I move my money out of, a balanced growth focused superannuation account and put it in cash or more conservative asset classes? So in other words, some people are watching the share market drop and seeing an opportunity to invest now, perhaps in anticipation of reasonable returns when the market, eventually rebounds, while others are watching their super balances drop and feeling, a rise in anxiety and thinking of moving, out of the share market, out of shares and into more conservative investments. So wherever you are, I want to share a few of the key things that Alicia takes her clients through to help their thinking around their their decision, and hopefully this can help with your decision making and importantly your peace of mind too. So the first sort of idea is, We don't know what the markets will do tomorrow, but in the long run, they have always rebounded. And if we look in the supporting blog, we've included a graph. And if you look over the past 100 plus years, there's been world wars, the Spanish flu, September 11, the dot-com bust, more recently, the GFC. And the market has still, despite these ups and downs and creating these events that create volatility in the market still climbed an average of 11.8% per annum since the 1900s. So while any long-term investment carries risk, the historical trend tells us that the market has rebounded from events like this in the past. And actually, if you look really closely at the graph, you can see that the greatest periods of growth have tended to happen in short periods of time, shortly after, the market rebounding from these events. And a key lesson that was learned, especially by a lot of retirees over the GFC, over 2008 and 2009 market decline, was that switching to a more conservative investment option in their super fund after the, sort of major market correction had occurred cost them, in a lot of cases, dearly. Research by the Industry Super Australia shows that after the GFC, Australians in an average industry super fund who moved their money from the balanced option into the fund's cash or conservative investment option were considerably worse off. And it's all very well saying, oh, okay, well, it was only by an average of $4,000 after 3 months, but compounded over time after 7 years. This is, over $46,000. So making these decisions in these tumultuous times can have enormous impacts on our long-term retirement savings. The key thing to understand here is right now, the loss isn't locked in. It's just, as we say, a paper loss. And as the market drops and your super balance falls, it's a real loss hasn't occurred because you haven't pulled your money out at that time. It's the same when the market has a positive upswing. The current loss or the gain is only locked in if you pull your money or move your money at that time. For most of us, superannuation is a long-term investment. The truth is, nobody knows how the market's going to perform in the coming days or weeks, and so shifting based on what you think will happen, especially in the short term, is incredibly challenging, and really, even for experts, a form of gambling, and particularly at the moment where we're seeing swings of sometimes 10% over one day. So the consequences of taking your money out or putting it in at the wrong moment are potentially significant when we're seeing these this high volatility or these big swings. It's important to understand and appreciate that your super fund actually knows and plans for moments like this to happen. So if you're invested in a balanced, super option, like most Australians are, it's expected that over a 20-year period, you'll have at least 4 years of negative returns. And superannuation funds take this into account when they're planning out their investment strategy. The key thing is a concept that we talk about again and again when we talk about investing, both inside and outside of super. It's that concept of diversification. So if you look at your product disclosure statement, in whether you're with Verve or another super fund, you can see the asset allocation. So in Verve's case, we've got an average of around 65% in growth assets and 35% in more defensive or conservative assets such as cash or fixed interest. And so that's over a third of your fund is actually in a more conservative investment approach. And so, of course, if you look at this over a graph, the more divested your funds are, the less high highs and low lows. You're going to ride it out and have a bit more smoother journey. In addition, Verve's also a deep ethical fund. So we're not invested in some of the hardest hit industries at the moment, like oil and other fossil fuels, airlines, banks. So we've been partially protected to date from some of the hardest hit industries. So there are three key things to think about when you're considering your decision making around your super at this time. So first of all, take a look at the companies your super is investing in, and an ethical and transparent fund should make this really easy to find on the website. And ask yourself, do you think these industries and companies will grow over the years and, importantly, the decades ahead? Keep your eyes on the long term rather than trying to guess or gamble without thinking over the short term. Secondly, look for a super fund offering an investment option that has an asset allocation that suits your personality, both in the good times and in the bad. So it's this fine balance of risk and return, and you need to feel comfortable about the level of risk as well as the potential for return. For those people thinking about, should I pull out my super and not only lock in the losses at this time, as we were discussing, but also moving it into cash. As we said, you're not going to see the market returns that may potentially happen down the track and over the next 20, 30, 40 years. As we talk about, cash may rise. Well, at the moment it's less than getting 1% returns, where inflation or the cost of goods is attempted to keep between 2 and 4%. And so if you have your money in cash over the long term, you're not keeping up with the cost of goods. So it's this fine balance between feeling a peace of mind during these really rocky times, but also ensuring that that we get a return over the long term. And of course, this is really comes back to your risk profile and your personal financial situation and what other assets and financial structures and support and resources you have in place in your life. So secondly, look for a super fund offering an investment option that has an asset allocation that feels comfortable for you. And then thirdly, finally, for peace of mind, don't look at your super account balance every day. So how often did you look at your balance in good times? Maybe monthly, quarterly, annually? Rarely. So why do we want to look at it in bad times? So your super is this long-term investment, and it doesn't need to be reviewed daily. And when there are so many other stresses in all our lives at the moment, we need to ensure we keep our peace of mind, our long-term perspective, and so do and make financial decisions and watch your household cash flow really closely at the moment. But those longer term investments, just keep a side eye without putting too much stress into the short term ebbs and flows. So of course, if you're unsure if you have the right structure in place for any of your investments, and including your superannuation portfolio, please seek professional advice. For Verve members, we have the support squad available for you. You can book a free session. So take care not only of your finances, but also of your spirit in these times. And we're constantly sending out our love.